I propose to increase the rebate limit to 7 lakhs in the
Hit hard by inflation, India's salaried class heaved a sigh of relief on Wednesday when Union Finance Minister Nirmala Sitharaman announced 5 major changes in personal income tax regime. She said that the changes were aimed at benefiting the country's hardworking middle class. Sitharaman proposed to raise the tax rebate limit to 7 lakh rupees in the new tax regime. She also proposed to reduce the number of slabs to 5 and increase the tax exemption limit to 3 lakh rupees. We spoke to experts to know the fine print.
Here's what the budget means for income tax payers. When the finance minister said that below 7 lakhs, you don't need to pay tax, she was referring to a specific clause, which is the income tax rebate limit, which says up to that limit, you don't need to pay tax. Now, when she's referring to the slab, right, the slab is the rate at which you pay tax for that amount of earning. So these two need to be looked independently. So if you're someone who's making 15 lakhs, right, you'll be affected by the latter, which is the various tax slab. But if you're someone making less than 7 lakh, you're only going to be affected by the fact that the rebate lets you through without having to pay any income tax next year. Two categories are clearly benefited. So if you make up to 7 lakhs, you don't have to pay tax. There's a tax rebate. That's great. If you're in the top of the pyramid, your highest tax slab effectively goes down from 43% to 39%, you're benefited. If you're between 7 and 15, and you are in the new tax regime, that means you don't make any deductions under ATC, home loan, NPS. If you're in that new tax regime, at 9 lakh rupees, you now pay 15,000 less in tax per year. At 15 lakh rupees, you pay 37,500 less in tax per year. However, if you were in the old regime using deduction, there's no change in what you will pay this year.
When we look at the speech and when we look at the fine print, there are some differences, but certainly, it is more advantageous. In new regime, there are a couple of more changes that earlier standard deductions was not considered for once we opt for new regime. But now standard deductions will be allowed. As a result, this will offer more advantage to the person. Secondly, from a HNI perspective, if we look at it, there are a couple of changes which has been made, especially in case of when capital gains is to be claimed exempt under 54, where you are investing in a new asset. If the entire consideration received is invested in a residential property, the entire capital gain would have been exempted from tax. Now, the investment in excess of 10 crores will be ignored. As a result, there will be a substantial fall on claiming exemption under 54.
They have tried to promote the new tax regime by making it more attractive. However, if one sees the granular calculation, probably there is not much difference between the old regime and the new regime in terms of overall tax payable for a small taxpayer. There will be just marginal difference, and that too under the old regime, the taxpayer will be more beneficial.
Yeah, interestingly, the government has increased the limit of senior citizen savings schemes and monthly income schemes, and also offered a similar scheme for women where you have a time limit of 2 years and you can earn 7.5% interest. Now, this is an interesting move because a lot of us were expecting that ATC would go up, that you'd have more opportunity to invest either in PPF or similar fixed income instruments and claim a tax benefit. However, they've not done that. They've not touched anything in the old tax regime, and they've offered these benefits I think this is excellent for senior citizens who have been feeling the pain of, probably not savvy enough to invest in the stock markets, and looking at fixed income instruments. I think this will definitely find a lot of favor. So senior citizens will jump into this. They have a higher deduction for interest income as well. For women also, I would greatly encourage them to look at, what is this Mahila Savings Scheme, 2-year lock-in and 7.5% taxability. Of course, tax interest will be taxable, and that also seems like a good thing to opt for.
So this government this time in the budget has tried increasing more money at individuals' hand, which will lead to more consumption, more savings. Also, if you look at the super rich one, where the surcharge used to be 37%, the overall surcharge will now come down to 25%. So on that category also, they will have more money in hand, which will be used for either saving, consumption.
While experts and industry insiders agree that the budget presented a relief for the common man's pocket, they also highlight the fact that the middle income group would require serious strategization in choosing between the old and new tax regime, with an eye on which schemes spell the greatest relief for them. Meanwhile, there is news for smokers amongst the middle class too. The government has increased the National Calamity Contingent Duty, or NCCD, on cigarettes by 16%. So, the packs of cigarette will soon cost more.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.